World markets begin today's session following a day of trade weighed down by uncertainty as global stocks await more direction from the U.S. Federal Reserve's next move on the interest rates. Meanwhile, the euro slumping to record lows while the rand struggled against a resurgent U.S. dollar. Independent markets analyst Jimmy Moyaha joining us now for a look at what we can expect today in terms of trade at the stock market. Jimmy, good morning to you. So those global stocks not performing exceptionally so far in this week's trade. What are the factors at play ahead of that latest from the U.S. Fed later this week?
Morning, Coley. Morning to the viewers. There's a couple of factors that we need to be cognizant of at the moment. I mean, we're seeing that the European region and a lot of European countries are under a lot of pressure from an energy price perspective. We're seeing that U.S. inflationary concerns, albeit in some respects subsiding. We're still seeing that members of the FOMC are still coming out very firmly to say that interest rate hikes will not stop. They will not be slowed down at this stage to match what's happening on the inflation front. So we're still very much on edge around the world for various sort of factors. We've got the UK concerns around stagflation, and their concerns are slightly different from the rest of Europe, given that, again, European concerns are mainly centered around energy pricing. From our side and in South Africa, we're also looking at fuel pricing, food pricing as well, the price of oil and energy pricing, coupled with the rand's weakening against the dollar at this stage as we import. Our imports will go up and we import a lot of fuel there as well. So there's a couple of factors driving markets around the world, but overall sentiment is mixed depending on which sort of region you're looking at. We've got some positive sentiment out of the U.S. at the moment, pending what happens with the Jackson Hole Symposium. We are expecting that Fed Chair Jerome Powell will speak there and will give greater direction on what the U.S. plans to do there. We're seeing a slowdown in demand from the Chinese side of things, from Chinese economies and production numbers out there as well. So overall, I think it's a mixed bag of driving factors that are having sort of a mixed influence on the markets. I mean, the top 40 and the JSE down in early trade this morning as well off the back of negative trade out of Asia. But we saw that we did see some positivity out of markets like Tokyo overnight as well. So depending on sort of where you're sitting in the world and which economies and markets you're looking at, we're seeing a bit of a mixed reaction this morning.
Yeah, you talk about the rand, which is struggling against a resurgent U.S. dollar. What's driving that sentiment?
So a lot of rand sentiment at the moment is centered around the U.S. inflationary conversation, particularly, again, with that Jackson Hole Symposium coming up this week. We're also looking at the fact that we've got our own inflation print coming out, I believe, in about 25 minutes or so from Stats SA. We're expecting another month of above expectations in terms of inflations. I think consensus at the moment was sitting around 7.7% year on year, up from 7.4% last month. So there's a lot of factors around the rand at the moment sort of being driven a lot more by sort of resurgent dollar strength rather than rand weakness. We are expecting that inflation print is not going to show signs of any slowdown at this point. If you look at the inflation prints from the US, Europe, the UK and other major economies and other regions, South Africa's inflation sort of started a rapid increase or a more significant increase a couple of months after we saw the inflation start to sort of spike in the other regions. So we are lagging behind a bit there, but at the moment sort of emerging markets are still offering a bit of an attractive yield if you look at return on investment at this stage as compared to some of the other regions, and that's probably why you're seeing something like our top 40 be able to hold fairly steady at above that 62,000 points mark there and sort of contain or contend with whatever is happening around the world and still be able to have some bullish days.
Yeah, you've already referred to that CPI data that is anticipated. Let's see if we can drill slightly more. That consumer price inflation, those figures that are going to be given out by Stats SA. What is the market expecting there? Because we see that CPI is reaching new record highs in the previous print, of course.
Absolutely. So, I mean, we're close to sort of May, I believe it was May 2008 highs as well, where we saw inflation peak or tap above that 8% level. We saw the inflation print of last month year on year coming in at 7.4%. We're expecting that 7.7%, closer to that 8%, as I said. Core CPI, which strips out, of course, the effect of food and energy prices, that is also looking to increase. Came in at about 4.4% last month. We're expecting 4.5% this month. So month on month, from a CPI perspective, I think we're looking at last month was about 1.1%. We're expecting a 1.4% increase there. That's what's going to filter into that big 7.7% number. I think we'll definitely stay above last month's print because we've seen around the world that there's no global signs of inflation peaking at this stage, and it's likely that we're going to continue to see that happen within South Africa. There's a very real possibility that in the coming months we do reach that 8% level. We're hoping it doesn't happen, but there is a very real possibility of that if you look at where energy prices are sitting at the moment globally, and you look at our import price, and you look at the fact that the rand is sitting above 17 rand to the dollar at the moment.
Yeah, let's touch on company news very briefly and go straight to the latest that we can expect from Avenge, as that construction company continues to project profitability.
Yeah, so Avenge coming out with some really good numbers there, saying that their work in hand is up about 23%. They've signed up, I think, almost 900 million Australian dollar of new work in Australia. They're expecting that for their 2023 financial year, they've already secured about 91% of their revenues, which is fantastic for a construction company to be able to do, locking in revenues this early ahead of their new financial year. It's just for them to then deliver on that. They've got about 20 billion, I think it's about 23 billion rands worth of contracts sitting, waiting for approval, waiting for a decision that they're hoping goes in their favor. So that could potentially add to their order book at that point. They did not declare a dividend, but they did also announce that their net debt was down some 400 million, or just under 400 million rand for the year. We did, of course, see that from a dividend perspective and from an earnings per share perspective, last year there were a large number of non-recurring events, including, I think it was a 600 million rand fair value adjustment towards their Trident Steel business, which they are still looking to sell. They've confirmed that they're still in the process of finalizing that. They're in advanced stages there and expecting the sale to still go through there. So overall, positive numbers from Avenge, which is something we haven't seen from the construction space and from Avenge. I mean, we did see the first year of profitability last year, so this is the second year of profitability. But overall, I mean, revenues were up 1.9%, earnings were up about 7.5%, not adjusting for sort of your once-off recurring items. So good numbers from Avenge, hoping that what they've been able to do in terms of securing their order book and continuing to secure work in hand continues to grow, and they'll be able to realize those profits within the new financial year.
Yeah, let's conclude with Momentum Metropolitan, also talking about better profits. How are their numbers looking?
So Momentum is going to give us their official results around the 14th of September, but they are expecting headline earnings per share to be up some 850-odd%. Basic earnings per share up some 720 to 740-odd% there. As I said, we'll get those results later in the month. The main impact and the main differences are the impact that they saw COVID have last year. I mean, they had about 1.1 billion rands in provisions from 2021 for COVID-related concerns around that. But one of the other announcements that they did make is that the Abu Dhabi Investment Authority is taking a stake in their Dubai venture at the moment. They're looking to take, I think, about a 9.9% stake. That's obviously going to be subject to regulatory approvals. Once that goes through, Avenge will be left with some 44-odd% as a result of that. But again, subject to regulatory approvals. And from a numbers perspective, we'll see a more detailed outline of their performance come the 14th of September.
Jimmy Moyaha, independent markets analyst. Let me thank you very much for that markets update.